Welcome back. Now it's time for our weekly market update with Catherine Murray, host of The Buck Stops Here. Take it away, Catherine.
Thanks, Julie. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, we are seeing strong North American equity markets today, the first day of March, but let's look back at February because it was really a standout month for the S&P 500 as well as the NASDAQ, up 5% and 6% respectively, marking 4 straight months of gains. So very strong market performance. We'll get to the reasons why in just a second. TSX up by about 1% today and was up 1.6% in February. So certainly lagged those U.S. markets, but still showed a little bit of nice performance. Why are we seeing such strength in the North American equity markets? I'd say two key drivers. One is the U.S. economic data coming in a little bit better than expected. Expectations were for somewhat of a hard landing. People very, very concerned that the Fed needed to cut sooner, and the fact that they still haven't was going to lead to a decline in economic activity as well as earnings. That really has not been the case. So economic data as well as earnings really have been some of the key tailwinds for the broader North American equity market. I would say two key themes to watch out for as we look at those U.S. markets. One, of course, is AI. That's been a huge driver for the tech sector in the United States, namely NVIDIA, the star player there. And then also the obesity drugs. That's also been a big focus for investors, looking at some of the big pharmaceutical companies and investing in that area. One stock I would point out today would be Dell. They came in with better than expected earnings, setting that stock up by 25%. Clearly, that was not expected, or you wouldn't see that big of a jump. As we look at other areas within the market, gold's up by about 1.2%. WTI, the price of oil per barrel, has an 8 handle on it. It's now $80 per barrel, up by about 2.7% today. So we've got some momentum getting back to the energy sector. Canadian dollar is higher versus the US dollar, but it has been down by about 1% versus the US dollar in the month of February. So it's, again, a little bit of lagging in the Canadian markets and also, of course, the Canadian currency. Away from that, ISM did contract. So, again, a little bit of mixed economic data. We did have the PMI in the States show some nice expansion. And I think bottom line as well, when you look at those U.S. markets, the Fed is still very much expected to cut rates by investors' expectations, but that really has been pushed back into the later part of the year. So just be mindful of that. The market definitely mispriced those expectations, but now seems to be in line. Away from that, just to note, Elon Musk is suing OpenAI and Sam Altman, alleging that they are breaching the AI mandate, which is AI for humanity and not to make profits off of. So we'll see how that plays out. As we look at the Canadian markets, the TSX is up by 1%, near the best levels of the day. Most sectors are higher. Energy, clearly the standout. The energy sector tends to move on the back of the price of oil. And as I said, WTI is up by 2.7%. Importantly as well, GDP came in line with expectations, maybe a little bit higher, 1% versus 0.9%. That was on Thursday. So probably not too much of a need for the BOC, the Bank of Canada, to cut rates next week. So I think the consensus is that they will stand pat as it relates to the current rate environment. Away from that, we did, however, see the Canadian manufacturing still in contraction mode, 49.7, but it did improve versus the prior month. And we also, of course, have rounded out the Canadian bank earnings. Royal Bank, National, BNS, as well as TD all beat expectations. BMO did not, in part due to their capital markets business. But interestingly, you are seeing a number of the analysts decrease estimates for the bank earnings on the back of softer loan demand and also higher provisions for losses, so higher reserves. So note that for sure. Also, just to note as well, Alberta's budget did have a narrower surplus, 367 million. And just one stock to watch here as well. Martin Rea down 15%, coming in with worse than expected earnings results. So a lot to watch as we head into next week, though. Bank of Canada and, of course, continued Fed speak. Markets have been very, very strong as of late, and we'll keep our eyes on it for next week. Julie, back to you.
Thanks for that, Catherine.